Friday with replays all weekend on Bloomberg Television and Radio.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
I think that it's hard to put your head around any narrative. Let's just be honest.
I invest in Invesco QQQ, a fund that gives me access to NASDAQ 100 innovations like CGI. Oh, don't worry.
Become an agent of innovation with Invesco QQQ. Before investing, carefully read and consider fund investment objectives, risks, charges, and expenses, and more in a prospectus at Invesco.com.
Futures up around about 0.8%. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Live from New York City, we begin with the big issue. Russia stepping up its assault across Ukraine. President Biden commending Ukrainian efforts to hold back the invasion, delivering another warning for President Putin.
The United States and the people around the world are going to continue to support the Ukrainian people, I believe, as they defend their country. Ukraine will never be a victory for Putin.
The president speaking from the White House in just over an hour, according to our reporting, preparing to announce the end of Russia's preferred trade status and clearing the way for significantly higher tariffs. Meanwhile, one line from President Putin getting plenty of attention this morning. The Russian leader seeing, quote, positive movement in talks with Ukraine. Our team coverage starts right now with Maria Tadeo from Versailles and Anne-Marie down in D.C. Maria, first of all to you, what's the reaction been to that line from President Putin a few hours ago?
Look, Jonathan, there's a lot of cautious here because what I'm told repeatedly is that when it comes to Vladimir Putin and the Russian foreign policy, you should focus on the actions, not the words. And this is coming just a few hours after a hospital was bombed in Mariupol. We know that was a real tragedy happening there. We know that city has come under very intense attacks. We also know that yesterday Sergei Lavrov continued to deny that Russia is engaging in a war, saying that this is a special mission. He also said Russia never had any intention to attack neighbors, but of course the reality on the ground is very different. And when you hear the information from Ukraine, I know we're going to speak to the foreign minister in a few hours, they continue to say we worry about more attacks from Russia, and we also worry, quote, about the use of biological weapons in cities that are still resisting Russian military attacks. So again, the line that I would caution everyone is you focus on the actions, not so much on the talk. And again, another point here that's very important. This is a war, Jonathan, that's not going well for Russia. It's been 15 days. Remember, the Kremlin was betting on a quick operation, a quick in-and-out war. Now this is turning into a 2-week-long war with extreme resistance on the ground. And this is also a very special or expensive war, I should say, for Russia at a time in which the economy is coming under huge scrutiny.
Anne-Marie, two things to watch. 10:15 Eastern Time, the President of the United States, and then your interview with the Ukrainian Foreign Minister at 11:30.
Yeah, definitely two things to watch. On the first note, Jonathan, this is just another escalation from the West to put these penalties on Russia for this invasion. Though we should note, the U.S. doesn't import a whole lot of Russian goods. So revoking this normal trade status means that they're going to have much higher tariffs on those goods coming into the United States is a little bit more significant and symbolic. But the United States has been working with other G7 countries. Canada has already done this. Likely, dependingly, potentially, the European Union may follow suit. That would hurt a lot more. And then when it comes to Dmytro Kuleba, the foreign minister of Ukraine, he'll be sitting down with me virtually. Jonathan, what we really want to know is, first off the bat, what is the Ukrainian response to President Putin coming out and publicly sitting next to Alexander Lukashenko, saying that he's seen some positive developments in terms of what he's been told from his team on the diplomatic front? Because, Jonathan, on the ground, it seems that things are only getting worse.
Well, compare the action to the words. Maria, to come back to you on that, you touched on it. The action and the words seem to be very, very different. I remember a couple of days ago covering this market, equities up. We were talking about a diplomatic breakthrough following an interview that you conducted. And then later that evening, the only pictures that dominated the news cycle, a maternity hospital in Mariupol, totally devastated. Can you compare, can you reconcile what we heard from the Russian president this morning with what we're seeing play out in Ukraine on a daily basis?
Well, Jonathan, we've seen those pictures. Those pictures are tragic. And in fact, the talk here is of Vladimir Putin, by attacking a hospital, by attacking pregnant women who were expecting to have child, may have been a war crime. The tone here today is very different from European leaders. They say that they're horrified by the brutality of this war that only seems to be going in crescendo. You also have to look at the daily bombings that we see from Russia to Ukraine, some of the big cities that we know they continue to fight. And then the other thing, of course, to note here, and this is presumably the key, is the fact that Russia has not agreed to a ceasefire. The Ukrainians continue to say, we'll believe it when we see it. And to believe that Russia is serious about a diplomatic way forward here, we need to have a ceasefire. As long as this blitzkrieg continues on Ukraine, there's nothing to talk about. We need a pause on the bombings and the daily attacks in the country, and that is not happening. By the way, when you look at the humanitarian situation too, Russia agreed to evacuate people, but the reality on the ground is also very different. In Mariupol, we talk about a real human tragedy if these people are not able to leave the city. Remember, Jonathan, it's been a week in which they've struggled to heat themselves, to have electricity and have access to proper food and water. So the situation on the ground is very dramatic, and we should continue to highlight that.
Maria, thank you. Maria Tadeo, out of a side today. Bloomberg's Anne-Marie staying close. Look out for that conversation a little bit later this morning, 11:30 Eastern Time. Anne-Marie Hordern sitting down with the Ukrainian Foreign Minister. A conversation, 11:30, you do not want to miss. We only have 50% of the story so far. We need to see the reaction, how they characterize current talks from their side of the table a little bit later. Off the back of those comments, the S&P 500, session highs up 1.85%, now up just 0.8%. Putting it all together, three issues now. This from Goldman. Tighter financial conditions, slower European growth, softer consumer sentiment. What do? They downgrade their US GDP forecast to reflect higher crude and other drags on growth related to the war in Ukraine. They drop their fourth quarter estimate for 2022 from 2% to 1.75. Joining us on all of that, PGIM's Mike Collins, John Hancock's Emily Rowland, and Troy Gajewski of FS Investments. And Emily, if I can I start here? How would you know if we're in a bear market? How would you know?
Yeah, John, first of all, our hearts go out to the people of Ukraine. You know, hearing these stories is just heartbreaking, and it's often really difficult to the investment discussion, but that's certainly what we're here to do. And as far as, you know, keeping an eye out on bear markets, you know, we're seeing it certainly in some parts of the market that are really getting punished here. You know, energy, commodity prices, the only thing that's working in this market, which is certainly a challenge for investors. As far as stocks go, we're looking at an environment in which the fundamental backdrop remains decent here. You know, we've seen this negative price action play out. We're at about a 12% or so decline from the peak in the market, but that's really been based on fears of Fed tightening, geopolitical risk coming to the forefront. Meanwhile, earnings estimates continue to move higher here. So until we see a significant deterioration in economic growth, which frankly we're not seeing in the data, we just added 700,000 jobs to the U.S. economy. PMIs are still very elevated. Earnings estimates continue to move higher. We're very, you know, kind of cautiously optimistic here that there is an opportunity to add to positions.
Mike Collins, have you seen any deterioration in high yield and credit more broadly? I'm looking at high yield spreads wider by about 100 basis points year to date. Are you seeing anything dramatic, any bigger cracks more recently? And not just in the States, worldwide for that matter too, Mike.
Yeah, so obviously the bond market, or we like to think the bond market tends to sniff out these problems maybe a little sooner. So, yeah, one thing you look at, Jonathan, is credit spreads. And they've actually been pretty well contained. Like you said, high yield spreads are, 30% wider, 100 basis points. Investment grade has actually suffered a little bit more. We looked at the relative value between them like we always do. And high quality spreads are wider as a percentage. And they're also closer to historical averages where high yield is still a little bit lower. But one of the differences obviously is in Europe, right? The European credit markets just based on their proximity to the events in the Ukraine, are actually underperforming here quite a bit. But the big thing we're focused on are these financial conditions and these liquidity conditions, right? So you look at the money markets. Everything starts at the front end of the curve. You look at dislocations in the Treasury curve. These little subtle signals, Jonathan, they're actually really troublesome right now, and they're pointing to quite a bit of stress in the markets.
We're all seeing the same headlines at the moment. We're going to have a media briefing on the summit that's taken place in Europe from Draghi. We hear from him at the moment. He's talking about the cost of energy. We're going to hear from Macron, von der Leyen, and other European leaders as well. When those headlines come through, I'll get to them for you. I want to come to you, Troy, and pick up on what Mike was just talking about. Just little pockets of stress, tension. Can you identify them too?
Yeah, so, unfortunately, as you know, we weren't optimistic about vanilla assets, whether it's the Barclays Ag or broader equities this year, just based on the fact that the Fed was going to be tightening policy, and that was playing out. And then, of course, you had the additional shock of the terrible Ukraine crisis, as Emily was saying. Our hearts go out to all the people suffering there. And so it's unnerving to see some of these cracks now, when the Fed has still expanded their balance sheet by over $170 billion so far this year, right? So you've had substantial market stress, you've had widening in high yield, you've had some financing pockets of uncertainty, and the Fed has yet to hike. And not only have they yet to hike, they've yet to stop expanding their balance sheet, right? So to Emily's point, on the fundamentals of the economy, yes, we'll have slower growth this year because of the energy shock than we would have, all things being equal, as substitution effects take place. But earnings should still be relatively robust. But at the end of the day, it's very hard for markets to make higher highs when the Fed is tightening policy. And so we're clearly well away from that right now.
Well, I want to go back to Emily in just a moment and get her thoughts on where she'd be adding, given the dislocation we've just seen, given what she said a couple of minutes ago. I'll come back to that in a moment. Some headlines from the Italian leader, the Prime Minister Mario Draghi, saying the EU sees 200 billion euros from taxing extra profits of energy companies, going on to say many EU states plan taxing extra profits of energy companies. There's a summit ongoing. We're starting to hear from the leaders in a media briefing. We're hearing from Mario Draghi as well. Going to look into that a little bit more for you. Anything to talk about, I'll touch base with Maria Tadeo in just a moment. Abby, I'm going to come to you and get some movers about 20 minutes out from the opening bell.
Well, John, we are, of course, looking at a bullish start here for stocks. The S&P 500 E-mini futures may be off the 1.8 or so highs, but we are up about 0.75%. The NASDAQ 100 futures up about 1%. Not surprisingly, big tech is strong. Alphabet up about 1%. As a representative of that group, Boeing, or the industrial complex, also doing well, up 1.9%. Consumer goods, especially those that export to Russia, on the optimism around the recent Putin comments, faring well. Anheuser-Busch up about 3%. And then, not surprisingly, the travel trade doing very well. United Airlines, the most exposure on an international basis, up 2.9%, John.
Abby, thank you. Just hearing from the Italian Prime Minister, Mario Draghi, speaking after an EU summit, saying the following: the EU sees 200 billion euros from taxing extra profits of energy companies, and suggesting that many EU states might be heading in that direction, saying many EU states plan taxing extra profits of energy companies. More on that a little bit later. Coming up, war in Ukraine, clouding the outlook for global central banks.
The war in Ukraine is a substantial upside risk, especially to energy prices. Inflation could also turn out to be higher over the medium term.
A confusing ECB news conference. It's the Fed's turn. Up next.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
The war in Ukraine is a substantial upside risk, especially to energy prices. Energy prices, which surged by 31.7% in February, continue to be the main reason for this high rate of inflation and are also pushing up prices across many other sectors.
It's a massive issue for the European economy right now. That was President Lagarde yesterday, moments ago, from Prime Minister Mario Draghi of Italy, saying the EU needs an extra 1.5 to 2 trillion euros for climate, defence and energy. You can start to see where this is going. We heard from Chancellor Scholz as well, saying many Russians are noticing the impact of war due to sanctions, commenting, both of them, at news conferences following the EU summit in France. That line from Mario Draghi, though, the EU needs an extra 1.5 trillion to 2 trillion euros for climate, defence and energy. Mike McKee, I'm going to turn to you. Things are tough in Europe. It's Jay Powell's turn next week.
Yeah, things aren't quite as tough here, and the markets have pretty much baked in a rate increase. 25 basis points, because Jay Powell says it's going to be 25, and what the chairman wants, the chairman usually gets. And they will probably also stress economic uncertainties as the economy reopens from COVID and feels the effect of the Russian war. What we're all going to be watching, though, is what they're going to be doing next. What's the path forward from Wednesday? While the Vocal Group on Wall Street anticipates as many as 7 rate moves this year, 1 at every remaining meeting, the latest Bloomberg survey of economists find they think the path as laid out in the dot plot on Wednesday will show 4. Only 4 this year and 5 more in 2023, each a quarter percentage point, no half-point moves. The Fed funds rate reaches 1.25% by the end of this year, 2.5% by the end of next year. As for the balance sheet, the Fed's likely to start asset reductions with a roll-off of maturing securities between July and September, according to 54% of the economists. And they predict the balance sheet drops to $8.5 trillion by the end of this year, another trillion the year after. A significant minority, 38%, think that with housing and rental prices surging, the Fed might choose to let mortgage-backed securities run off faster than treasuries. 54% think they'll go at the same pace. The other question is, what kind of forward guidance do we get from the Fed? They dropped it at the last meeting. Economists have mixed views. 28% think that they will tell us on Wednesday that they're going to do another rate hike in May. 45% say they're going to come out and tell us there's a string of rate increases ahead. The rest think the statement includes no guidance. Biggest risk for the Fed? 23% say the Fed will be too slow to tighten and inflation gets embedded. 28% say they're being too aggressive with rates and a recession is going to be a big concern. By the way, John, I wanted to mention at noon today, actually 11:50 a.m., the New York Fed will buy about $1 million worth of mortgage-backed securities, the last new purchase for the Fed under the QE program put in place for COVID. They bought their last treasuries on Wednesday. That started on May 15th, 2020. The COVID QE period officially comes to an end. I know that your panel's been up all night baking cupcakes
I'm celebrating the moment.
To observe it, yeah.
They haven't missed the fact that the last Treasuries purchase and the last MBS purchase sandwiches an inflation print at 7.9%, Mike. I don't think that's lost on anybody. Mike McKee, thank you, buddy, as always. City out this morning, one line, the conclusion of their note. We expect 200 basis points of hikes in 2022. Is that possible? Mike Collins, Emily Rowland, Troy Gayeski. Troy, is that possible?
It's possible, but highly improbable, right? I mean, we've been in the 4 to 5 camp for quite some time. We think the Fed wants to err on the side of caution. Remember, we were spent 10 to 12 years in a period of a disinflationary cycle where deflation was a real fear, and they've shown a willingness to be behind the curve with regard to inflation. When you price in 8 hikes, that just seems rather aggressive. We still think it's more than 4 to 5. That being said, we still think investors should embrace strategies that benefit from higher rates, particularly floating rate, senior secured commercial real estate debt, or business development corporations that benefit from higher rates at the front end of the curve.
Mike Collins, your thoughts?
Yeah, I'm definitely taking the under, as you probably know, Jonathan, on 7 rate hikes this year, right? You know, I'm typically a pretty optimistic guy, but I think the linkages of what's happening in Ukraine with Russia and the trade friction. I mean, we've identified almost 100 commodities that Russia and Ukraine make up 5% or more of the world's output. And we haven't even started really feeling the impacts. And inflation is going to be such a drag on growth. I mean, I've just seen airfares double or triple seemingly in the last week or so, and that is really going to bite demand. So I think the risk now is actually more to the downside than the upside, and I think that means the Fed, even though inflation is going to be really elevated and really sticky, they really have to be careful here, and they just can't overhike.
Emily, you said you'd look to add here, or something to that effect. Where?
It's difficult, John. I mean, I think just to build on that conversation, the yield curve is the one thing that we haven't talked about, and it's actually been flattening to the tune of 14 basis points a month since peaking last March. So I think that the Fed's going to have a really hard time initiating 7 rate hikes given the flattening dynamics that have taken place. So we're also taking the under on that. By the way, high quality bonds have just seen the worst drawdown at about 6.5% on the ag than they've seen in over 30 years right now. So when we think about adding to positions, we look at these higher yields, frankly, as being more attractive now. You're getting 3.5% to 5% on corporate bonds in the triple B space, in the double B space. It feels really painful right now, but we're in a bear market as far as bonds go. And by the way, investors tend to hate bonds right before they love them. And we're seeing advisors and investors dump their higher quality bonds, their corporate bonds right now. We would suggest actually considering adding to positions.
I want to talk about this inverted yield curve. Hasn't happened yet, but Troy Gayeski, is that inevitable now? South of 30 basis points before a rate hiking cycle begins. Is that inevitable before year end?
You know, I don't think it's inevitable, right? I mean, the back end of the curve bounces around quite a bit. We had a good flight to quality, obviously driven by the Russian invasion. You started to see those yields pop back up here. We've always thought the curve would have a bear flattener this year. It's been faster than we suspected, given the aggressive pace of Fed rate hikes. And we would say, again, that the predictive power of a flattening curve isn't quite as attractive or accurate as most people say. That being said, you have to recognize that the combination of slower growth than we expected coming into the year, as well as the stagflationary environment that we could enter, makes us much more cautious as we go into 2023 over whether we can continue to expand at the rate we have. But I wouldn't call for an inverted yield curve by the end of the year just quite yet.
Troy Gayeski, alongside Mike Collins and Emily Rowland. There are about 4 different news conferences taking place at the moment. I'll try and bring it all together for you. On defense and peace, Vice President Harris speaking at a news conference in Romania. Harris saying the US will defend every inch of NATO territory. On sanctions, Chancellor Scholz saying this: pursuing sanctions to hit the Russian economy directly. Mario Draghi of Italy saying harsher sanctions on Russia mean less risk of a wider war. And the EU leader, von der Leyen, saying to come forward with the 4th sanctions package. Now, energy is a big part of the conversation at this EU summit today as well. Scholz is talking about potentially doing something around energy prices, Draghi doing the same thing. Ultimately, Chancellor Scholz saying the EU to do all it can to cut energy dependence on Russia. And von der Leyen is talking about getting together again mid-May to present a plan to optimize the power market. And by mid-May, to offer a proposal for Russian gas phase-out. As you know, that is going to be tremendously...
Wow, we're crunching tons of polygons here.
What's going on? Where's Regina?
Hi, I'm LaDonna. I invest in Invesco QQQ, a fund that gives me access to NASDAQ 100 innovations like real-time CGI.
Okay.
I'm here at the Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
In crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Futures up 0.7%. Here are your morning calls. We begin first up with JP Morgan downgrading Chevron to underweight, seeing limited upside. UBS downgrading Weibo to neutral, warning about weakening margins. And Piper Sandler downgrading Oracle to underweight, expecting a significant decline in free cash flow. Coming up, the Wall Street retreat from Russia, JP Morgan and Goldman, and the losses beginning to pile up.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
This is a market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
"24 seconds away from the opening bow this morning. Good morning to you. Looking to wrap up the week on a positive note for the equity market, at least. Up 0.7% on the S&P. The pop this morning fades as the session grows older. The Nasdaq up 0.9%. From New York City, your opening bell this Friday morning rings. Switch at the board and get to the bond market. Your 10-year through 2%. Just for a moment, up a couple of basis points. Euro dollar unchanged, 109.86. Crude up 1%, 107.10. Would you have guessed Sunday evening that on the week crude would be down? The biggest weekly loss of the year so far. Week's not over yet, but that's the story so far with crude at 107. Happening right now in France, Emmanuel Macron, the French president, alongside Charles Michel, the EU Council president, and Ursula von der Leyen, the EU Commission president. That news conference ongoing following an EU summit. Joining us now from that location, Maria Tadeo. Maria, what have you heard so far?
Well, Jonathan, we talked about this. How much weight would you give to Vladimir Putin's words at this point? And today we see that very little. European leaders say that there should be still, or there needs to be a path to a diplomatic solution, but what they want to see is actions, no words. And the French president was very clear in this press conference that is still ongoing. He said we need to see a ceasefire and we need to see Russia pull back troops. At that point, then we'll believe the words of Vladimir Putin, not before that. And again, the ceasefire, it is so key because Ukrainians have said for a long time now, we've been blitzkrieged for 2 weeks. We're not going to negotiate or exchange territories with Russian troops on the ground and an ongoing bombing of our cities for 2 weeks. So this ceasefire is so crucial. So what I would say, and I would caution everyone, is that, of course, the words of Vladimir Putin point to perhaps a diplomatic way forward. But if he doesn't move his troops back, then that is going to be very difficult to achieve in real terms, especially as we see a continuation of what is now a human tragedy in Mariupol. This has been sieged now for days. We know that citizens there are lacking electricity, they lack power, heating, food, and a hospital with pregnant women was bombed yesterday, which, by the way, the Russians continue to deny. They say there was no hospital there, that this was a base for ultra-nationalist Ukrainians.
Looking at the path forward for sanctions, Maria, we hear from the President of the United States at 10:15 Eastern Time. That's the schedule. Expecting him to open the door and start a process to introduce higher tariffs on Russian goods, imports from Russia into the United States. The question for me now is about Europe. Emmanuel Macron has said, as far as the invasion is concerned, the priority is a ceasefire and the Russian troop withdrawal. We see no sign of that developing whatsoever over the last few days. Macron went on to say, we're ready to adopt more sanctions. All options are on the table. What options are left that they can actually follow through on, given the resistance we're getting from Germany?
Well, they can cut energy. That is a big question that's not been touched. For many, that is the key goal and the key sector that should be tackled. They could also end business with Gazprom and Sberbank. Remember, they still continue to do business with Gazprom because of the gas flows going into Europe, and Sberbank is the bank that deals with those transactions. Now, they could do that too, and they could potentially target some other industries that still operate in Russia that have business with the European Union. That has to do, of course, with key industries related to industries. Now, for the time being, they haven't done that because, as you pointed out, the Germans continue to say you can't just unplug and unswitch from a system from one day to another. It's not realistic. The other thing we should point out is we talked about the European energy system and the European energy market. Well, the problem is right now there isn't one. What you have is an energy market that's very much split, 27 countries that use 27 different methods. So this is not a unique market that can be tackled from one day to another. But what is key here is that today they haven't gone as far as the United States. There is no import on gas from Russia or oil coming from Russia. But of course, they keep that door open, suggesting it could be in the making. I know that I spoke with the Polish Prime Minister, the Slovenian Prime Minister, and they say they want to see that. They want to see it immediately. And in fact, it's interesting. When I spoke to the Slovenian Prime Minister, he told me it could send a shock to the European economy, but we're strong enough. And this is almost an existential question now. This is not just about the economy this year, but it's about the future of Europe and the signal that you want to send to Vladimir Putin. He will take whatever he gets.
Maria Tadeo, thank you. That's taking place in Versailles right now with the French leader alongside European Commission leader and the leader of the European Council as well. Nearby, Romania. This is happening. Vice President Harris saying the following: Putin shows no sign of engaging in serious diplomacy. Now, compare and contrast this line from the Russian leader this morning. The Russian President Vladimir Putin citing, quote, positive movement in talks with Ukraine, with this line from the US Vice President Kamala Harris in Romania, alongside with the Romania leader, saying the following: Putin shows no sign of engaging in serious diplomacy. Your equity market, about 5 minutes in, we are positive by 0.7% on the S&P 500. With your movers this morning, here's Abby.
Hey, John. Well, yes, investors are constructive this morning with that S&P 500 up about 0.6%. A broad-based rally, 10 of 11 sectors higher, led by, in part, financials, with JP Morgan up about 0.7%. We also have NVIDIA up 1.2%, tech a solid gainer. The travel trade had been higher. In fact, the airlines are higher, Carnival reversing just a little bit, but the one notable laggard on the day, energy down 0.5%. Chevron, one of those laggards, down 1%. As you mentioned, crude oil actually down on the week by about 7%, a bit of a surprise. So energy, the one sector lower today, John.
Abby, thank you. Turning to Kaylee Lyons for a little bit more. Hey, Kaylee.
Hey, John. Well, I want to take a look at the banks in particular because they had a big up day yesterday. The KBW Bank Index up more than 4%, but that only goes so far to unwind some of the pain this sector has experienced in the last month. We're still down more than 11% over that time, drastically underperforming the broader market. But the picture is even worse for banks in Europe. That Stock 600 Bank Index in a bear market, down 21% over the last month. Of course, one issue is just the broader macroeconomic risk stemming from the war in Ukraine. Could it delay rate hikes, which would really help those banks out? Then there's also the issue of direct Russian exposure. The Italian banks, primarily Unicredit, have $25 billion collectively in exposure. For the French banks like SocGen, another $25 billion, and Raiffeisen in Austria has $17.5 billion as well. But there is a U.S. bank on this list, John. That is Citigroup, almost $10 billion in direct exposure. 100% write-off of those assets would cost it about 6.5% of its equity capital. Compare that to Goldman and JP Morgan, which have much smaller direct exposure, and you can see why it's a lot easier for them to pull out of the Russian market, as they have announced in the last 24 hours, than it would be for the likes of Citi. But of course, it's not just the financial sector wrapped up in this. The technology sector is as well. The U.S. really leading the effort to deprive Russia of key components it needs for weapons, for high-end industry. But some of the biggest tech companies have pulled out themselves. Apple, for example, a de facto boycott on the country, though it supplies just 15% of Russian smartphones. And as for how technology has performed throughout this war, John, I looked at the numbers in the last 20 trading days. The NASDAQ 100 has swung to the upper downside by at least 1% in 15 of them. The most of them have been to the downside, with that index down about 10% in the last month, John.
Kaylee Lyons, thank you. Still with us, waiting patiently, and thank you for that. Mike Collins, Emily Rowland, and Troy Gajewski. Troy, let's talk about investment opportunities right now. What are they?
Yeah, so look, if you're trying to solve for low beta and low duration, given the rather challenging environment we have now for both equities and bonds, not only because of the Fed, but because of what's going on overseas. You have senior secured commercial real estate debt. It's fully floating rates, so you're going to benefit from the Fed hiking. and you have very little economic sensitivity given that you're senior in the capital structure. You also have low beta multi-strategy solutions, which are a combination of relative value trades across fixed income. We actually have a pretty sizable basis short on where we're shorting pass-throughs versus treasuries as the Fed's finally unwinding QE, as Mike alluded to before. But if you can tolerate a little bit more volatility, you might want to take a look at FSK, which is our flagship listed BDC. It's almost 100% U.S. exposure, continues to have improving credit quality. We continue to modestly boost leverage, as well as reduce our liability cost. And so it trades at close to a 20% discount to NAV and close to an 11% dividend yield with improving credit quality. And so if you do the math, if you can earn the dividend plus continued appreciation as we converge to NAV, we think that's one of the best, if not the best, total return story in credit today.
Mike Collins, your take.
Yeah, I'm with Emily and Troy to some extent. We're actually starting to see, Jonathan, pockets of value emerging, some of them in very high quality investment grade corporate bonds, even taxable municipal bonds. I mean, there have been some 20, 30, 40, even 100-year bonds issued in the last week or so that have much higher yields and much higher spreads than we've seen in a long time. I mean, you're kind of in this 5-handle, even higher than 5-handle range on some, triple B bonds, like Emily said. In high yield, there are some high yield closed-end funds that have also gotten killed. Talk about, kind of trading to a discount. In the structured product arena, to Troy's point, we're actually doing a deep dive with our team in an hour or so. And there are some new deals coming to the market that really look like they've already exhibited a lot of pain and a lot of risk priced in. So there are opportunities emerging. It's time to start nibbling in credit.
Emily, can I take you towards the banks and the carnage that we've seen in the European names and how the US banks haven't really performed in line with the idea that Citi has, that we get 200 basis points of hikes this year? That gap's opened up again for Europe. Is that another trap?
Yeah, John, if you want to own financials, we suggest that you do it here in the U.S. U.S. banks have better balance sheets. We're seeing a more solid picture emerge as far as economic growth prospects here in the U.S. And certainly the geographic distance that we have from the geopolitical conflict that's going on is also an advantage. Earnings estimates for financials in the first quarter really healthy right now. So again, we would emphasize financials here. It looks like the ECB actually might be lifting off here. That was a big hawkish surprise. Potentially they do have the ability to do that, but still, again, a better economic growth profile here in the U.S.
And when Mario Draghi has to say the following, the kind of situation we're in. Draghi right now, no risk for Italian debt. Italy can withstand a slowdown. Troy, back to you. Is that the theme here for you? Stay close to home. And home in this case means the States.
Yeah, 100%. So avoid value traps. Europe's almost always a value trap. Focus on U.S. strategies that can benefit from the Fed hiking, where you continue to have credit improvement. If you can buy something that trades at a discount to NAV like FSK, and still make a teens type total return with some degree of volatility, that's the more aggressive approach. And then if you're going to focus on lower return strategies that don't have the whipsaw action from the bond bear market or continued equity uncertainty, you move up in the capital structure, you get senior secured. Again, you benefit from the Fed hiking. Now's not a time to take wild adventures overseas when you have opportunities like this in the U.S.
Mike Collins, final word.
Yeah, there's a lot of opportunities starting to emerge. I think it's too early to jump in with both feet, Jonathan. Again, whether it's equities or credit risk, I think there's going to be a little more capitulation. We haven't seen that real liquidity panic or capitulation trade yet. I actually think the economic data and the earnings data is probably going to get worse before it gets better in the face of this monetary and fiscal policy tightening. It's going to be rough sledding. So there will be opportunities. Keep dry powder and just keep buying on weakness and when opportunities emerge.
Awesome panel this morning. Guys, to all three of you, thanks for your patience. Thanks for being with us. Mike Collins, Emily Rowland, Troy Gajewski. Equities, about 12 minutes in, up 0.5% on the S&P, up 0.25% on the NASDAQ. Coming up, Wall Street joining the corporate exodus from Russia.
It's a very difficult situation that on one hand we have these financial sanctions that are very hard, but on the other hand we are supporting and actually financing Russia's war to purchasing oil.
That conversation.
Wow. We're crunching tons of polygons here.
What's going on? Where's Regina?
Hi, I'm LaDonna.
En nuestro estudio, en nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes. Según las mediciones, nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's a very difficult situation that on one hand we have these financial sanctions that are very hard, but on the other hand we are supporting and actually financing Russia's war to purchasing oil, gas and other fossil fuels from Russia. So the situation isn't a very good one.
Sanctions on Russia piling up from governments and firms, including now the biggest names on Wall Street, JP Morgan and Goldman, and the hits. The losses piling up too. BlackRock reportedly, according to the Financial Times, facing a $17 billion loss. They say, quote, clients held more than $18.2 billion in Russian assets at the end of January, but shuttered markets and worldwide sanctions imposed after Russian President Vladimir Putin invaded Ukraine have made the vast majority unsaleable. Bloomberg's Wall Street correspondent Shanali Basak joins us now for more. Morning, Shanali.
Good morning, John. What's happening over at BlackRock is a story that a lot of people are seeing play out on Wall Street, which is that if these firms are marking down these assets so much, who will buy them? Because some of them could be sold to or related to sanctioned entities, and some of them are just not worth very much. There's also that uncalculated risk, that's reputational risk that many asset managers do not want to get into right now. You see BlackRock shares down this year as a lot of its funds have a lot of exposure to Russia, but not just Russia, emerging markets more broadly that have fallen. Let's take a look at what these funds are that have lost money in the first place. Some of them are more opaque, John. Some we have reported are the hedge fund, the emerging markets frontier fund that plunged over 10% in February, but some are very liquid funds. Let's take a look at this emerging markets fund, EMB, a very large one, holds bonds around the world, but part of it is Russian sovereign debt, as I know you've been talking about a lot, that risk of default that we're seeing next week, starting alone. It has lost almost $2 billion of value. And you look at that as well as the Russian fund itself, ERUS, which has halted trading. Take a look at the whole scope here. You have such a wide array of funds that have some array of exposure and not a lot of answers on what to do with the holdings that underpin them.
And thinking of the banks pulling back, we need some answers on Citi. Shanali's going to be trying to answer those questions for you through the day on Bloomberg TV and radio. Shanali, thank you. Bit of breaking news from the Wall Street Journal. The United States. President Biden speaks at 10:15 Eastern. This is what the Wall Street Journal has to say. The U.S. is planning to ban imports of Russian alcohol and seafood, according to people familiar with the matter, in the latest effort to punish Moscow for the country's invasion of Ukraine. Team coverage to wrap up this show in the week with Bloomberg's Anne-Marie in Washington, Maria Tadeo in Versailles, where news conferences, many of them are taking place at the moment. AMH, first to you. What we're looking for at 10:15.
Well, we know the president is going to talk about not having Russia be this normal trade status anymore, which means that that's going to be higher tariffs for any imports and basically taking them out of the WTO system when they import into the United States. Jonathan, though, the president cannot do this unilaterally. He needs Congress. And we just have also headlines coming in from Speaker Pelosi saying a bill to end those normal trade ties with Russia will hit the floor next week. Then we have news from the Wall Street Journal talking about that they are already going to also ban alcohol and seafood. So once again, you see the sanctions are continuing as Russia maintains their presence in Ukraine and continuously is assaulting on these Ukrainian cities. This week, Jonathan, it has to be the one that really captured the hearts and minds of everyone around the world, and just those tragic pictures coming out of that hospital in Mariupol.
Beyond tragic, devastating for everybody that's seen it. Maria, with that in mind, the pressure's building on the Europeans to do more and at the same time insulate themselves from higher gas prices, higher energy prices at home. Has that been a big part of the conversation where you are today?
Well, it has been, but if anything, Jonathan, I have to go back to what Anne-Marie just said, and is that shelling of Mariupol that has really changed the conversation here. I have a European official that tells me after a maternity ward gets bombed, how can you believe anything that Russia says? Remember, they denied bombing this. They say this was a headquarters for ultra-nationalists in Ukraine. Now, for the Europeans, this has really been an eye-opener. We were seeing it, and we see it right now in this press conference that's happening right now, how the change in tone in the language has really shifted. They now say they want to see actions. They do not believe Vladimir Putin. This is someone that has destroyed his international credibility in 2 weeks. For them to take Vladimir Putin serious, they want to see a ceasefire that is immediate. Remember, this is almost a blitzkrieg war that's been going on for 2 weeks, and they want to see him pull back troops. The impression we get for Vladimir Putin is that, if anything, he's bringing additional soldiers into the country. Now, to answer your question specifically about energy, look, we didn't get a full ban on energy imports. We didn't get it for oil. We didn't get it for gas. But the Europeans say that could be in the cards going forward, but they want to see the full impact of the sanctions that have already been put in place. The other thing, of course, that I would point to is the reality that we have here in Europe. We do not have a unified energy market. This is a market that's very split, that's very much divided by different energy systems and components in the different countries. And this is why they find themselves in a very difficult situation. A country like Germany, they say, well, if we unswitch from one day to another, that's a recession coming.
AMH, I want to give you the final word. We have heard from the European leader, von der Leyen. We've heard from leaders across Europe, Scholz, Macron, Draghi. We've heard from Vice President Harris. We will hear from the President of the United States, President Biden, in the next hour. There's a missing voice, and it's Ukraine's. When you speak to the Ukrainian Foreign Minister a little bit later, 11:30 Eastern, what is the number one question for you when you open that conversation?
Well, Jonathan, it first has to be the Ukrainian response, right, to what President Vladimir Putin said earlier today, which was, he said, there's some positive movement in the talks with Ukraine. He also said that talks are happening practically every day. Is that true, and on what level? And does Ukraine think that these talks are moving in a positive direction? Because he's coming out of a meeting already with Sergei Lavrov in Turkey, and that did not seem optimistic at all, in the sense that Lavrov couldn't even discuss humanitarian corridors doors to get civilians out of Ukraine, especially after we discussed this bombing and shelling of that hospital in Mariupol. So that has to be the first question. And then, Jonathan, for Dmytro Kuleba, who I spoke to also just hours before President Putin gave that speech to invade Ukraine, his number one issue with the West is more sanctions.
AMH, thank you. Anne-Marie in D.C., Maria Tadeo, fantastic job all week. From my audience to the two of you, just absolutely brilliant. I think we can say that on behalf of us all, can't we? Von der Leyen just saying this on EU membership, Commission to form opinion on Ukraine's membership in a very short amount of time. The process can be very long, but they're looking to form an opinion in a very short time, according to the EU Commission President.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Almost 26 minutes into the session, these gains are fading. We're up about 1/3 on the S&P and unchanged on the Nasdaq. That's the price action. The events of the next couple of hours, really, really important. Let's get to the trading diary. We shape up as follows. Within the next hour, President Biden announcing new actions against Russia. We'll take his comments in full right here on Bloomberg. We get the University of Michigan Consumer Sentiment Survey, US retail sales next Wednesday, plus a Fed decision and Chairman Powell news conference. Finally, the Bank of England with its own rate decision on Thursday. And I want to leave you with this, an important conversation, 11:30 Eastern, with Bloomberg's Anne-Marie and the Ukrainian Foreign Minister. With that, have a great weekend.
if you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
Wow, we're crunching tons of polygons here.
What's going on? Where's Regina?
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Business Week about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands. And it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
I won! Look for the winning number in Sari stores every day, also on TV, radio, and newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with number fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the streets, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their million-peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for number fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, "Pepsi goons bomb their own trucks." And when I visited the NBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them to try and curry favor. I just thought that was so shocking, and of course Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the Number Fever campaign. Del Fierro thought Pepsi's Number Fever campaign was just one of the many ways that America was asserting its dominance over a third world country. He hated seeing his fellow countrymen get ripped off, in his eyes, by this huge multinational American company. He wanted justice. Del Fierro rounded up over 800 winners of 349 bottle caps, and he got them all together to sue Pepsi for over $400 million to be divided between those holders of lucky bottle caps. Del Fierro took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees, but for people who couldn't afford the money, he would just represent them pro bono.
The alliance is to build up pressure on Pepsi. And so you see people marching in the streets. So we have mounted our own campaign, even in the U.S.
He flew to America and he hired two consumer lawyers here in America to take on Pepsi. He had a meeting at Pepsi's headquarters to try and resolve the problem, but he said he wanted to take it all the way to the highest courts in America. When those cases were heard in America, those courts decided that this was a problem that should be heard in the Philippines, not in America. Back in the Philippines, Del Fierro continued his case in the Filipino courts. At one stage, there were arrest warrants handed out for 9 Pepsi-Cola executives, which he saw as a big victory. We don't know if those arrest warrants were ever upheld, but it made newspaper headlines across the country. Pepsi did not take kindly to Del Fierro's campaign. They tried everything to shut him down. They sued him for libel.
My father had to attend 3 times a month for a branch 145 and another hearing for the branch 113, also 3 times a month. Also, there was a time my father was hospital due to heart failure. Still, he had to attend the 2 branch hearing. Otherwise, for not attending, the judge will issue warrant of arrest to my father. My father passed away January 13, 2010. After staying for almost 1 year in the hospital, he died of complication due to heart failure. After the death of my father, I was inspired to do the website. PepsiCo will be remembered for what they did to the consumer in the Philippines and to my father.
When I reached out to Pepsi for comment for this story, they claimed that they didn't have access to anyone who was working at Pepsi that was around in those days. They also said that during COVID-19 they didn't have access to their documents about this, but you know, they were very careful to say that they were sorry for everything that happened, and we do know that Pepsi did try everything to try and make this right. The Pepsi Number Fever disaster cost the company millions. We know that they paid up to $10 million in those goodwill payments, but the financial effect could be much greater. After the disaster, we know that Pepsi sales dipped. They were overtaken by Coca-Cola again. Pepsi's Number Fever disaster changed the legacy of that soft drink in the Philippines forever. Some people of a certain age won't touch it. For many people, Pepsi is a taboo word. A lot of the people that I spoke to were still quite traumatized by their experience, by that experience of winning $1 million pesos, losing it, and then returning to their normal life in poverty in Manila.
When the news of the bombing came out, it was a massive story in Germany.
We are following some breaking news coming to us out of Dortmund in Germany.
It was covered by all the media outlets.
3 roadside explosions triggered at the same time last night as the coach left its hotel in the south of Dortmund.
Public figures commented on it.
We should not let them affect our life, whoever it was.
The media echo went far beyond Dortmund.
I think it was front page news in every single big paper around Europe. Everyone thought of like a terrorist attack, and people were scared that throughout the city in Dortmund there was more attacks to be happening.
Unbeknownst to investigators, just after the bomb went off and the players of the team were shell-shocked, the person who had masterminded the attack was actually sitting in the hotel eating steak and sweet potatoes. My name is Thomas Rogers. I'm the journalist who wrote the article, The Get-Rich-Quick Scheme That Nearly Killed a German Soccer Team. Dortmund is a mid-sized city in the western part of Germany in a state called North Rhine-Westphalia. And it's a former industrial city that's kind of fallen on hard times in the last few decades. It was severely bombed in the war, so the center of the city is quite stark. Some of the few high points include its soccer team.
My name is Ike Henning. I'm a reporter with Bloomberg News, and I'm a great fan of Borussia Dortmund. Dortmund fans are super loyal. On all match days, the entire city is in black and yellow. It's like a religion.
I think more than most German cities, soccer does play a very large role in the identity of Dortmund. In October of 2000, the BVB became the first team in the Bundesliga to actually go public. Salaries for soccer players in the Bundesliga have gone up very dramatically. With such high prices, they thought that by going public, they would be able to compete better with big teams like Bayern Munich.
Unfortunately, that didn't go too well. Dortmund bought too many expensive players, high wages, and the club almost went bust in 2005.
The price of their shares, it has sometimes gone up, but mostly gone down since they made that decision. So on April 11th, 2017, the team was staying in a hotel on the outskirts of Dortmund.
Match days are always special in Dortmund. Everyone is looking forward to it. The team always meets in the same hotel ahead of matches.
They stayed in this hotel in order to have a kind of neutral space before games so that they could concentrate, be sort of isolated from distractions, things like that.
Everyone was pretty optimistic. They had a chance to go really far, maybe into the finals. I was in the office and getting ready for match day. I was going to meet with a friend, a fellow Dortmund supporter, in a pub. As always, the fans are very excited about matches.
On that day, they were heading to play in the quarterfinal against AS Monaco at Signal Iduna Stadium, which is in the center of Dortmund. Shortly before 7 p.m., the players of the team boarded their official team bus.
When the bus took off the parking lot of the hotel and turned on the street, there were three detonations, 3 bombs that exploded and hit the bus of Dortmund.
3 explosions occurred close to the Borussia Dortmund team bus. The B team bus had just left the hotel. The explosions destroyed 2 windows in the rear part of the bus.
People screamed, people jumped to the ground.
The fellow Dortmund fan I was supposed to watch the match with, he called me and said, turn on the TV, there was an attack of the Dortmund bus. And I thought he was like, that was impossible.
Some of the players screamed at the driver to keep driving as fast as possible because they were worried that people might storm the bus.
German investigators say the explosive devices used in the attack on the Borussia Dortmund bus contained metal pins and that one had pierced a seat headrest.
Unbeknownst to the team members, the actual mastermind behind the attack was, as they were disembarking the bus, was actually eating steak and sweet potatoes at the hotel they had just left.
Authorities are attempting to verify a letter left at the scene claiming jihadists were behind the attack.
Because there had been a series of attacks by Islamic terrorists in Germany and Europe, there was widespread suspicion in the media that this was another Islamic terror attack. 3 letters were found at the site of the bombing that took credit for the attack on behalf of Islamic State. There were, however, reasons to doubt this particular narrative.
Would actually be a surprise if ISIS were actually part of this attack. Possibly could be employed by other groups like the far right wing to try and shift the blame.
The letters had some strange qualities. They were written in a strange German that used big, sophisticated words, but had basic grammar mistakes, as if someone was native German speaker but pretending to be a foreign person.
Federal investigators have detained one man suspected of links to Islamist terrorism, one of 2 suspects whose apartments were raided this morning.
Shortly after the bombing, a man in Austria named Rudolf, who was a big BVB fan, he noticed that something strange was going on the stock market related to the team's shares. He emailed the lawyers of BVB, who then forwarded that email on to investigators. The email stated that someone had bought 60,000 BVB put options, a wager that the value of the shares of the team would fall below a certain amount at a certain date.
Why would someone buy that ahead of a match and then 3 bombs go off? Something isn't right here.
For the person to make money off of that, it required the stock to go down quite a bit in a fairly short period of time. And it wouldn't just be the team losing a match, it would require something much bigger than that. There was another big red flag about this purchase, which is the fact that it had actually been made, number one, on the day of the bombing, but also from an IP address that had been traced to the actual hotel where the bombing had taken place.
When 3 explosions targeted the bus carrying the Borussia Dortmund footballers on April the 11th, written notes left at the scene claimed the attack was the work of ISIL. The truth, as is now alleged, is remarkable.
On April 21st, the police arrested a man in a southern German city called Tübingen. He was on his way to work, and his name was Sergei Venegold. He seemed like an unlikely suspect because he had no known connections to the Islamic terror world. He didn't seem like a far-right extremist. He didn't seem like a left-wing extremist either. He seemed to be a completely unremarkable young man.
A 28-year-old German-Russian man, named only as Sergei W., stayed in the same hotel as the players on the night before the bombing. He specifically requested an upper room overlooking the bushes where the explosive devices were hidden.
The media dissected why he would do that, what was his past.
He had been inspired by the 2015 terror attack in Paris. And he noticed that in the aftermath of the attack, the stocks of French companies went down. And he believed that if an attack took place that was directed at a specific company, that the decrease in stock price for that company would be even more dramatic.
It never occurred to anyone that someone would do that out of greed.
We now know that the suspect bought 3 different derivatives on the Borussia Dortmund shares. With all these derivatives, he bet on falling shares. The suspect bought the majority of these financial products on the 11th of April, the day of the attack.
If the plot had been completely successful and the stock had reached a value of 0, Venegold would have made up to 570,000 euros, or the equivalent of about $608,000. Ultimately, the plan completely backfired.
The attacker, Sergei Venegold, didn't make any money. In fact, he lost money.
In court, he would be extremely quiet. He usually kept his hands clasped together. One of the lawyers actually commented that he had never seen a defendant act so calmly. Venegold had served some time in the German military. From that information and from online research, he was able to figure out how to assemble remote detonated bombs that would do what he hoped to do. There were a few days of extremely emotional testimony, including the soccer players who described doubting whether or not they could ever play another game again.
It brought everything back up, and it didn't quite help them to kind of process what was going on.
Throughout it all, he sat there completely silent. The big mystery that was swirling around the trial was the question of why he may have simply done it because he wanted to impress a woman. Rebecca is a young woman who has a very troubled home life. She ultimately sees her relationship with Weinergold as an opportunity to leave that troubled home. Weinergold is a Russian immigrant to Germany. He speaks with an accent. He has anxiety in large groups of Germans. She begins to resent the fact that he has these fears and feels a little bit trapped. Rebecca attempts to dump him on multiple occasions, and he threatens to commit suicide if she leaves him. Weinergold apparently told Rebecca that she would soon be seeing a surprise. After being dumped via text message, he apparently began planning for this attack in earnest. Weinergold was charged with 28 counts of attempted murder, which carried a maximum sentence in Germany of life in prison. He claimed that he had nothing to do with the attack, but as time went on, he admitted that he had actually been the person who had built the explosives and had set them off. But he claimed that he didn't want to actually kill anybody. Ultimately, Weinergold didn't receive the harshest possible sentence. He was given 14 years in prison, but it's still a considerable amount in jail in Germany.
The threat of an asteroid hitting Earth is very real. If it's big enough, it's also very final.
These are very, very infrequent events. The probability is not zero, though.
A blinding flash of light streaking across the sky.
About 100 tons of space rock falls on Earth every day. Most of it is so small it burns up in our atmosphere or lands unnoticed away from major populations. No human in the past 1,000 years is known to have been killed by a meteorite, and according to NASA, no large object is likely to strike the Earth any time in the next several hundred years. However, one thing is certain: we haven't found them all.
There are thousands out there, and we don't know where they are.
There are a lot of asteroids in our solar system. They number in the billions.
Scientists all over the world are working toward detecting and deflecting the most catastrophic of natural disasters.
The race is on to find as many of these objects as we can.
We have a way of calculating whether or not an asteroid is potentially dangerous or not.
I mean, I think it's something worth investing in. It's our existence at stake, right?
Amy, let's get this one out of the way. It's probably the question you get asked the most, but how scared should we be?
Asteroids and comets are a natural hazard that's out there like a lot of other natural hazards. These are very, very infrequent events, these collision events, where an object actually impacts the Earth. The most important thing that we need to know about asteroids is when the next impact is going to happen and how bad it will be. What we know is that an object that's about, say, 1 kilometer across is capable of causing very, very wide devastation across the planet, really truly global devastation. The object that wiped out the dinosaurs was somewhere in the neighborhood of 5 to 10 kilometers across, so even bigger than that. At a kilometer, it's still going to be very bad and will have global effects. For objects that are capable of causing what I would call sort of regional damage, kind of a large major metropolitan area, a city and its surrounding environment, sort of around 100-ish meters. It depends on the details of the composition and so forth.
By the 1980s, NASA was cataloguing near-Earth objects. In 1994, stargazers watched as comet Shoemaker-Levy 9 hit Jupiter. The resulting zone of chaos was estimated to be as large as the Earth, and the event became a turning point in the search for asteroids and comets in our solar system. In 1998, Congress tasked NASA with finding 90% of asteroids and comets 1 kilometer wide or larger. Soon after, Hollywood blockbusters Armageddon and Deep Impact brought attention and fear to the masses.
The great news is that the vast majority, more than 90% of all the really large 1 kilometer near-Earth objects have been found. The challenge now is working down to these smaller sizes that are still quite capable of causing a lot of damage, but they're just harder to spot because they're fainter, they're smaller.
Can you give us a sense of how many are out there in our solar system?
We know that there are a lot of asteroids in our solar system. They number in the billions. Most of them, however, are between Mars and Jupiter in what we call the main asteroid belt. This is a region of space where most of the asteroids in the inner part of our solar system live, and they stay there for many billions of years. There is another population, though, that kind of leaks inward and gets into the region somewhat close to the Earth, and we call these near-Earth objects. We think that there are millions and millions of near-Earth objects that are out there in the total population. As of today, we know of sort of around 25,000, something like that. When we first spot an object, we really know very little about it. We just see something moving across the sky. So all you get is just sort of a handful of snapshots, just enough to be able to tell that this isn't an asteroid that we've already seen before. And then once we can calculate the distance to it, we can now start to make predictions about its true size. Is it large or is it small? So we have a lot of information that we have to get pretty quickly to really understand what's going on.
Finding asteroids is just one piece of the puzzle. Planetary scientists are extremely skilled in determining the orbits and speeds of asteroids based on relatively small amounts of data. NASA runs simulations of the trajectories asteroids could take, which is useful but time-consuming. A team of scientists in the Netherlands have found a way that could buy us more time.
Our method is very quick. So you can very quickly get an assessment of whether or not the object is dangerous or not. If you look at the classical way of determining the danger of an asteroid, it may take days of computing time on very big machines to determine this hazardousness.
The current problem is that there's just too many asteroids out there to spend a huge amount of computational power on all of them. So the neural network allows us to focus on what really could go and pose a hazard to Earth.
A neural network is a computing system that mimics the way the human brain operates to find underlying relationships in a set of data.
By training the network in this way, you train it in recognizing those objects that are most likely to hit the planet. And once it's trained, you can apply this network to all the unknown asteroids. And then you can make a selection and saying, hey, these are the ones which appear to be having orbits similar to the ones which we know are hitting the planet. That doesn't mean that they do, but it only means that they look very similar to the ones we know they do.
What else did you find? Should we be particularly concerned about anything?
One thing that we did find is that our neural network was able to go and identify a handful of asteroids which weren't considered potentially hazardous, that when we went and integrated them forward in time, they came quite close to Earth.
We find a handful which were not detected before or not considered being dangerous before, and we think they are potentially dangerous.
It's very hard to simulate kind of going forward in time an asteroid that's going to hit Earth because, well, the Earth is really small. And space is really big, and then you have to have very exact parameters to shoot an asteroid that goes and hits exactly Earth. And then Simon had the ingenious idea of not even trying to do that and just launching the asteroids from Earth's surface and integrating backwards in time.
It's very hard to make it hit. So you need a lot of calculations which all end up in nothing. And the idea was then like, well, let's not do that. This is basically what NASA is doing. NASA is taking an asteroid, making multiple copies of them, shooting them all forwards in time, calculating their orbits, and then see what fraction sort of gets close to Earth. Not even hitting Earth, but getting close to Earth. And then they call it a potential impactor. So you calculate the solar system forwards in time for, let's say, 1,000 years. And then you launch asteroids from the surface as if they, if you go forwards in time, would fall on the surface. You calculate them backwards to today, and then you get your orbital parameters of today's asteroids, which you know will land on the planet. And those you can use as known impactors and compare with all the other asteroids in the solar system.
Can simulations and AI, can those things fill in the gaps where perhaps telescopes and other imaging tools can't?
Absolutely. Since the observations get more complex, the physics gets more complex. And if the physics get more complex, the mathematics becomes more complex. And at some point, you can't solve your problems analytically anymore. And then this is where the computer comes in. Now we have this trained neural network. We have a way of calculating in a fraction of a second whether or not an asteroid is potentially dangerous or not, and therefore deserves more attention or more time to spend on for really finding out if it is dangerous.
When it comes to hunting asteroids, time is critical.
What we can do about a potentially hazardous object depends a great deal on what we know about it and how much time we have before the encounter. We'd really like to find them when they're decades away, because the more time you have, the more options you have, and the less energy it takes to move an object aside.
It also means we might not have to resort to launching a nuclear warhead at an asteroid. Until recently, pretty much our only choice.
That's an option of last resort, in my opinion, yes. We have lots of options available. You can just simply bump into the object and just nudge it out of the way. That's one possibility, and that's kind of, in a way, sort of the simplest thing to think about, just nudging it off its path a little bit with, a massive object, a spacecraft, let's say. It's kind of like bowling, if you will. If you have a long time or a long stretch of runway in the lane, just a very small twist on the bowling ball will make a big change in where it ultimately ends up. Another option would be something where you take a very big, massive spacecraft and you park it next to the object and you use the force of gravity as a towing rig. That takes longer, though, and you need to be able to send a pretty massive spacecraft, and it obviously depends a lot on how big the asteroid is. Other options start to get more and more complicated, and they range from painting one side of the object a white color and painting the other side dark, and then letting the pressure of light sort of perturb its orbit.
In a departure from the lab and computer simulations, NASA has real plans to rehearse kinetic impact deflection. In 2021, the agency will launch DART, the Double Asteroid Redirection Test mission, which will intercept a 160-meter asteroid in 2022. Better to practice now before we have to deal with an actual threat. In the meantime, discovering asteroids is our best bet. Thousands of scientists and amateur astronomers around the world make up an informal network that survey the heavens. But that may not be enough. NASA wants more resources to map our solar system and better technology.
We need to ramp up our network of sensors, and also we need to just continue to strengthen our network of international observers so that we can get follow-up, because we find these objects when they're distributed all over the night sky.
Once we get more observations, we get better data, we can make better predictions.
If you look at the big impactors we have had in the last, let's say, 20 years, or maybe 30 years, or 50 years, most of them we haven't seen coming. So the real danger, I think, comes from the objects we don't know about, and not from the objects we do know about.
This particular natural disaster, like a lot of natural disasters and like climate change, is a problem of the global commons. So the thing that we risk collectively is that it sort of then becomes nobody's problem, and nobody takes ownership over it. The asteroids are all over the sky. They just truly cross boundaries and borders with a second's notice.
I kind of imagine in the future, maybe lots of small satellites around the Earth that are always going and looking outward. I mean, I think it's something worth investing in.
I invest in Invesco QQQ, a fund that gives me access to NASDAQ 100 innovations like CGI. Oh, don't worry.
Become an agent of innovation with Invesco QQQ. Before investing, carefully read and consider fund investment objectives, risks, charges, and expenses, and more in a prospectus at Invesco.com.
The pandemic has affected everyone in different ways. Some pass the time by baking.
Homemade sourdough bread. Do I need to say more?
Some chose to binge watch Netflix.
It's your game.
Or maybe you started a garden oasis in your backyard.
Next, I'm going to put my lettuces in.
But for millions of others,
I'm going to be posting stocks that will boom.
They wanted to uproot the financial industry.
Let's just lock it on up and take $15,000!
Here's a stock that can change your life.
I see a stock going up and I buy it, and I just watch it until it stops going up, and then I sell it.
I have gained over $3 million.
I want some free money.
I don't think you can overstate the online communities or social media's influence on financial markets.
A large group of inexperienced investors who discuss their plans on social media platform Reddit have shaken up the stock market in a big way.
The stock that everybody's talking about right now is GameStop.
Video game retailer GameStop is set to continue their head-spinning ascent today.
The revolutionaries on Reddit are spanking Wall Street's ass.
The more these stocks go up, the more the big guys are getting creamed and losing billions of dollars.
This isn't a wealthy person's game anymore. Anyone can play it.
I took up a little bit of a new hobby, and I am interested in day trading.
As an investor nowadays, you don't have to look a specific way. You don't have to wear specific clothes. You don't have to be doing it from a trading floor on Wall Street in like a high-rise building in downtown Manhattan.
The narrative of what's driving the markets is no longer being held in secret offices in New York and Boston of privileged people talking to other privileged people. It's right out in the open. It's on Twitter, it's on Reddit.
From brokerage apps to Discord channels and subreddits to TikTok finfluencers, one of the last holdouts in the world of disruption, finance is next in line.
Investing should be as ubiquitous as shopping online.
That's Vlad Tenev, the CEO of Robinhood, the online brokerage app, talking about how he wants his app to disrupt the world of stock trading like Amazon disrupted the world of home shopping.
And I think that speaks to exactly the mission that a platform like Robinhood has, which is to democratize investing.
Robinhood was started in 2013 by Vlad Tenev and Baiju Bhatt in, where else, Silicon Valley, as an alternative to the big brokerages, but with one big difference.
As they were building the social network around finances for people, they realized that there was a gap in the market and that free trading could become something that they could bring to the markets, they could disrupt the industry.
While no-fee trading is industry standard today, it was unheard of when it was first introduced.
The online brokerage industry was really innovative when they came on the scene 10, 15 years ago, but they kind of stopped innovating where you haven't seen those commissions come down beyond $5 or $6 or $7. Robinhood think that by offering zero commission that they're going to push people onto this platform.
And on top of no-fee trading, the customers Robinhood was courting have been long overlooked in the world of finance.
So the typical customer of a Charles Schwab, for example, is putting a lot more money in that brokerage account than the typical customer at Robinhood. Even today, with all of its popularity, the median account size is about $240.
The Fidelities and the Schwabs and the E-Trades of the world, they look down their nose at those kind of accounts. I don't want a $1,000 account. They're just a headache. I want a $100,000 account.
And this is key here, right? Because the thing about Robinhood that's different than every other single brokerage platform is how easy it is to use.
The design of the Robinhood app really has in mind a user who might be coming at this absolutely cold.
The fonts are very well sized, the shapes, the colors, all of that is something that the founders of Robinhood paid really close attention to.
And by creating an interface that catered to a newer investor, they were able to gather a pretty healthy group of customers. And by 2019, they had about 10 million customers.
Those 10 million customers were a huge success story for Robinhood, but no one could have predicted its explosion after the arrival of COVID-19.
Remain indoors to the greatest extent, and 100% of the non-essential workforce must stay home.
What we saw when the pandemic hit was the growth of Robinhood users absolutely turbocharged. And oddly, you saw this surge in interest in stock trading. Then they saw the absolute surge in 2020 in customer growth. And now, by many accounts, they have more than 20 million customers, which is pretty extraordinary. Products come along with them.
Robinhood would become one of the COVID economy's breakout successes. Robinhood traders, as they're called, became the shorthand explanation for the frenzy of often speculative retail investing after the pandemic lockdowns.
Kids wake up in the morning, they go on Robinhood. They're, in the shower, they check Robinhood. Kids are learning how the stock market works at 18 while they're at school, checking their phones in between classes because notifications pop up telling them what their stocks are doing that day.
With these new tools, millennials and Gen Z are investing in the market in ways their parents could have never even dreamt of.
That is sort of key when we talk about the divide between older and younger generations, is that the younger generation is exposed to so much more information and tools at their disposal to do what they want in the market.
The older generations, you never had the technology or the cost structure that you could play the markets like you can today. So you were stuck with giving your money to a professional investor and paying them a fee to do it.
When I speak to young kids, they tell me, I'm making mistakes, I'm losing money. I'm not a perfect investor, but I'm 18, and by the time I'm 30, which will be, 10 years from now, I'm gonna have interacted with the markets for a decade. And so it's a learning experience more so than anything else.
And you can look at it and you can say, wow, that's risk-taking, that's dumb, but if you could possibly shave 10, 20 years off your working life versus adding 5 years, I don't think you can fault people for that.
But Robinhood is only part of the puzzle. Sure, you can trade on it, but without research, information, and data, you're just blindly throwing darts at different stocks and hoping to strike it rich.
Wall Street forever has always run on what we now call narratives or memes. People telling rumors to each other have been around for 100 years.
On Wall Street, information is its own currency. Historically, either you had it or you didn't. And the people who had it had a huge advantage.
In the past, those narratives and memes didn't have a network effect. It would be one person telling another person over the phone. In fact, when I broke into this business in the 80s, a lot of people used to complain that they weren't on the call list to get those ideas.
Social media changed all of that.
Fast forward to 2021, that's being done on the internet now. And that's being done on Discord and Twitter and StockTwits and Reddit. And the impact is very similar, but orders and orders of magnitude larger.
As social media has played a bigger part in our lives, it's also played a bigger and kind of more important role in how people find investing ideas online and on these platforms.
How do those ideas spread? On TikTok. Yes, that TikTok.
Soon may the weatherman come to bring us sugar and tea and rum.
People aren't just going to it for sea shanty videos.
The personal finance hashtag on TikTok has garnered 3.5 billion views from its 1 billion monthly active users. By comparison, videos found under the cooking and health tips hashtag have 2.6 and 2.1 billion views respectively.
The trajectory of Robinhood and TikTok were literally on par.
What happened in the stock market this week? So the word of the week is expectations.
Absolutely essential that you guys understand the risks of shorting.
And Kayla Kilbride and Kyla Scanlon are two of those financial influencer TikTokers, also known as finfluencers.
I think people still care about fashion, they care about culture, but it's also like there's this big